Hello again, this is Alex with MasterChartsTrading.com, and this is market recap of Friday, September 1st, 2018. As always, please hit the like button and subscribe to this channel. Excuse me. US stocks are making new highs, led by technology, discretionary, and healthcare sectors. The foreign stocks, some of them look kind of vulnerable, for example, Japanese, but NAFTA countries, Canada and Mexico, they don't look too bad, actually. Stock markets, we'll look at them. Emerging markets in Europe still under pressure. The European bond is definitely breaking out. US Treasuries, not so sure anymore. We'll look at dollar, gold. Gold is being sold. Oil approaches previous resistance. The trend is up. The opposite is true for natural gas. And we'll look at crypto, which I think is due for cryptos, which I think are due for a bounce. So let's look at S&P 500, ETF SPY. These are all-time highs on August 29, 2018. Breakout above previous highs from the January of 2018. So this is a bullish chart, pretty unequivocally so. The up arrows indicate places where I sent alerts to my subscribers at MasterChartsTrading.com. Notice the 4 lines on this chart again. I keep bringing this up, but this is important. Find out more about them at MasterChartsTrading.com. You can also look me up on TradingView. I have a couple of these are published scripts on TradingView, and you can find out more about them. So these lines, what do they do? These are basically support resistance lines. And I use them to, number one, find support and resistance, and buy or sell at those levels, because this is where the good opportunities quite often arise, around support and resistance. So you can see the previous alerts around the blue indicator line that was before it around 268, 269, successful alerts, and basically new highs. So again, an unequivocally bullish chart. I would not look for any kind of tapping pattern yet. Eventually the tapping pattern will be pretty obvious, basically, and we will act accordingly. This is not yet a tapping pattern from the January 2018. You can see that it did not result in a significant breakdown. So again, we will keep our minds open. We will keep in a bullish bias. I'm going to be looking for opportunities on any pullback. Not very interested in buying around the 284. I would be very interested currently buying around 274. Alright, let's look. So technology, discretionary, and healthcare. So sector review, XLY, discretionary, consumer discretionary. These are fresh all-time highs. This is showing excellent appetite for risk. Consumer discretionary sector is a very much a discretionary sector, and people don't have money during depression or recession and to spend, and during those times discretionary would be the first ones to suffer. But obviously right now people do have money to spend, and they are spending it, and discretionary stocks are at all-time highs. So this is pretty much a no-brainer as far as overall stock posture for the United States markets. XLV, very nice recent breakout. Again, right there, this is an alert that one second, that was sent to my subscribers just a few weeks ago. XLV, so here it is from July 2018. I'm not really doing anything unusual. I'm looking at my own indicator lines. You can see the blue, green, red, and yellow, and here the alert was sent straight up, nothing out of the ordinary, simply on close above my own blue indicator lines. And there it is on July 9th, 2018. So basically that's what I do. I look simply for an opportunity, an oversold security, but in this case, it was pretty obviously oversold because we can see a close below the red line. But finally we saw support right there on May 29th around the red line, and then since then we did not see any closes below the red line here, and eventually we saw a breakout. So there's that breakout, a close above the blue indicator line, of which you can find out more at MasterCharts Trading. Nice gain of a little bit over, let me see, what's it, 7, around 7.3%, just in a few days really, and a few weeks rather. So overall a nice gain. And healthcare, discretionary, and technology. Well, of course, technology, we can look at XLK rather. So there is XLK. We can also look at at fresh highs, basically, technology sector, but we can also look at QQQ, the Nasdaq 100. The composition of QQQ and XLK are very similar to one another, so you can see fresh highs on the technology heavy Nasdaq, which is showing again a good appetite for risk for the United States equities. Okay, let's look at foreign equities, Japanese equities first of all. EWJ. Not a great looking chart, not a terrible looking chart either. Caution, basically, caution, you can see. Now we can see another close below this red indicator line, and that is also not a good sign. We're super close to outright bearish levels. Outright bearish levels are around $56 or so. Emerging markets, EEM, same thing. Well, actually a lot worse than EWG. The breakdown occurred right there on June 27th. From then on, I only think about shorting. Conservative short levels currently around 45.24, 25, but looks like the aggressive short levels are already being played and possibly will make a fresh low. Here's VGK, the European proxy, also not looking great at all. This is a bearish downtrending security, and I would avoid it and or short it if you are sophisticated enough. So we got European, emerging markets, China basically approaching again fresh lows. Here's India, looking a little better than China. But I wanted to concentrate on North European Trade Agreement, NAFTA, North America Free Trade Agreement countries, and let's look at Canada, EWC. So Canada, this chart does not look bearish. This is a bullish chart. It's obviously weaker than S&P 500. S&P 500 is at all-time highs. Canadian shares are not at all-time highs just yet. But this is not a bad-looking chart, so I would possibly want to buy it, actually, if anything. Obviously, with the currency fluctuations, you have to take that in additional consideration, because the currency is the United States dollar is currently winning the battle against most major currencies, including the Canadian dollar. So there is more, I guess, issues with trading international stocks, because you also have to take into consideration the currency risk. But Canada doesn't look too bad right now, so we will again keep an open mind and possibly look for a buying opportunity here. And here's Mexico, EWW. Also doesn't look too bad. I mean, Mexican markets collapsed here into June, but rallied relatively high, and most importantly, right there on let's see, 7th of August 2018, I think that is a breakout, and that means we need to think about buying, not about selling. So maybe, yeah, maybe we will start buying Mexican shares as well. Just as a aside, we can look at US dollar versus Mexican peso if you are even able to trade it. But see, this chart actually shows that Mexican peso has been winning this battle since, well, June, obviously. And right now, there is a possibility that Mexican peso will continue appreciating. In other words, this chart will continue down because of this breakdown right there on 16th of July 2018, right there. So we will see where this is going, but NAFTA negotiations, maybe perhaps the negotiations is the correct term here, that they seem to be beneficial to all countries involved. So we got Mexican shares going higher, and I'm kind of interested now myself. EWC, the Canadian shares, are also not really dropping that badly. So we will see. Maybe this whole negotiation thing is a good thing. Yeah, better talk, right? At least we're talking. Okay, so emerging markets I already covered. So that's pretty much it as far as equities are concerned. S&P 500 obviously at all-time highs. I would look for a pullback towards support resistance lines, and my favorite place to look for a buying opportunity would be around my own blue indicator lines, which you can find out more about at MasterChartsTrading.com. Let's continue to bonds. So this is TLT, 20 plus year Treasury Bond Fund, United States Treasuries. I currently have a bearish bias down, bias to the downside on TLT. In other words, I think that this is an instrument that should be traded on the downside. I would want to short it. But this price action kind of confounded me. On August 1st here we see a nice big rally. Additionally, I'll show you bond BUND with a definite breakout. So we see a breakout here as early as, I guess, it's kind of questionable with this breakdown here on the June 13th. So perhaps we can interpret it as a breakdown. Perhaps it's an aberration, but even without this aberration, we see another breakout on June, well, actually as early as June 21st or June 27th, 2018. And from here on, we see opportunities to buy. Now, today, on Friday, the 31st of August, you can see a close above this green line. Now, this is unequivocally bullish behavior. So now, ideally, we should look for an opportunity to buy this instrument around 161.16, right there, like right at the blue indicator line. That's even if it comes down that low. The problem it comes here, if we look at the American bonds, TLT treasuries. Now I am seeing this breakdown on August 28th, and then a rally, and now another breakdown today on 31st of August. So and this is strong selling also. So I'm kind of wondering if the outcome of this battle would be to the downside, and finally TLT will make a new low. Up to 27th of August, I was thinking that we could actually break out above this blue indicator line, which would mean that we are going to be in the bull market. But this is now less likely. So this battle of the bulls and bears is still being decided, and I am now maybe around 60% convinced that we're gonna see a push lower, possibly 70% convinced. And then once again, the weird part is that the European bond is breaking out. Perhaps this is because European equities are under pressure, so money is rotating into Euro bonds. But let's continue looking at other parts of the bond market. Here's the junk bonds, JNK, at resistance. Stocks and bonds move together in unison, in lockstep rather. And here's another bond fund, HYG, the junk bond high yield bond fund, and this chart looks better, very close to a breakout level too. So this, if junk bonds break out higher, then this will definitely help the stock market. Alright, let's start with the Forex universe. Again, find out more about these lines at MasterChartsTrading.com. You can see the green, the blue, the red, and the yellow lines on this chart. So this is dollar index DXY, a bullish security, bullish instrument. Breakout occurred on May 28th, 2018, and from then on we should be looking only at bullish opportunities to buy. So far I'm still possibly we might get a pullback further towards 93.70 levels, towards this blue line, but it's now may not actually happen. I think it might be already, the dollar might be already headed higher. I started sending alerts to my subscribers on Forex, so we will kind of stick with the actual currency dollar DXY, the dollar index, for the review section. And if you're interested, you can sign up at MasterCharts Trading. Right now I am still including the Forex together with my current normal alerts and indicators service. So as a trial, or rather, if you sign up now, then you can probably continue receiving Forex alerts in the future. We will see. I'm not 100% on this yet. It's possible that I'll separate it out into a separate service. But on this chart, this is a bullish chart. So yeah, dollar is in an uptrend. Maybe a little bit more pullback, but overall it's in an uptrend. So let's look at gold, XAU, USD. In this case, you can see in the previous chart I showed you the dollar is in an uptrend, DXY. Here XAU USD, so the dollar is getting stronger and it's pulling the security down. If it was the opposite, if the gold was getting stronger, then the security would be going higher. So this is the essence of currency trading. You have a currency pair, and whichever one is getting stronger, that's where you want to be. You want to be on that side of the trade. So XAU USD breakdown as early as 25th of June, but definitely on July 6th, right there. You can see a close below the yellow indicator line, the support resistance line. So from then on, basically, we see only selling opportunities. Ideally, if you look at gold futures, GC1 exclamation point. Ideally, I would like to see a more bigger bounce, and ideally I would like to short at the red indicator line, which is currently at 1243. So if I had, or rather I would currently wait for an opportunity, confirm the price action, and then possibly short. So we will see. But I'm definitely not looking to buy, and I'm not looking to find the bottom of the gold prices. It's just impossible. GDX, gold miners ETF, collapsed. Big collapse, basically. So gold miners I was already avoiding back in May. Potentially short. If we get a bounce to $20.90, like 21 bucks basically, I think it would be a great opportunity to short it again. As long as dollar is in an uptrend, you can safely short gold and gold miners. Alright, let's continue to oil and natural gas. I apologize, I forgot natural gas last time, so I will try to remember. US oil, well, you can do futures, CL1 exclamation point. Almost got to my ideal buy place around 64 bucks and then rallied. We're at support resistance line currently at 70.53, this green indicator line. This is an uptrend in security, so I would be looking to buy it. I would not be looking for any top-in patterns yet. Natural gas, basically also in a downtrend, so a great opportunity to short would be like right there on 15th of August. Or even earlier. Basically I like to short on strong close below my red indicator line here. Here's another opportunity, and this one was likely already successful, depending on if you are nimble enough to exit quickly. Next is the cryptos. So Bitcoin versus US dollar. Bear market, bearish instrument, bounce very likely. I would, if you're an aggressive trader, and you can see aggressive traders were rewarded recently, then 76.80 would be a good place to consider opening a short. To me, if I was trading it, I would look for a 10,000, basically currently 10,066. To enter or look for a top-in pattern. For Bitcoin, this curving of the indicator lines can also be thought of. Now the price has less distance to travel towards the bullish levels. Let me demonstrate you what I mean. Previous place where bullish levels would have occurred was at like 15,000, but currently the price has come down, and now the bullish levels are only at 1290. So the distance towards bullish levels has decreased. That doesn't mean anything, because to even get there we first need to clear this yellow aggressive support resistance line, this red conservative support resistance line, and then finally get to the bullish levels. Obviously none of this has happened, so we need to look for shorting opportunities, not buying opportunities yet. Ethereum, same idea. Basically we need a big bounce towards at least 446 or better yet 690 to consider entering short. LTC USD, again same thing, need a bounce towards 92 or better yet 145 levels to short again. And EOS, I think it's USD. There's so many cryptos, I don't know which ones to cover, but here's EOS, big drop 50% drop following. Actually, these were live on this channel. These arrows were put there live during one of the previous videos. Alright, so head over to MasterChartsTrading.com, click on Alerts and Indicators, and sign up for one of the services. You can sign up for alerts only, but I think pretty much everybody signs up for alerts and indicators, so at the higher levels of subscription. The reason being is because you can have these lines on your chart, and it'll be super easy to trade. You can trade on daily, but you can, if you really want to, you can trade on 1 minute chart. It makes no difference. The price action is very similar. You can see that price action just kind of taps or bottoms around this indicator lines. On the intraday charts, you will have more whipsaws, in other words, more incorrect signals. But you can see that the price action, even on a 1 minute chart, look at this, this is a 1 minute chart. Look how nicely it follows the indicator line. So again, once head over to MasterCharts Trading, find out and sign up for a free trial for 4 weeks. If you have any questions, please send them in. Also, if you could comment with any questions or comments on this video, and like the video and share this video with others. Thanks for watching, and have another great trading week. Bye-bye.